Untitled.au studios, I'm CJ Dore. This video series is all about indicators, technical indicators. Now in another video, we looked at one of those indicators called the MACD. Now this video is in addition to the MACD, and what we're looking at is a feature called a fakeout, and it can happen while you've applied and are reading and interpreting the MACD. So let's move on and have a look and try and understand what it looks like and what to do. So here's our price action. We've got a candlestick chart here for this stock. Down here we've got our MACD indicator moving all around, twisting and turning up and down all over the place. Now let's have a look firstly at an upward crossover or an upward cross. And what we can see is the black MACD line has crossed through the red signal line on the way up. Now let's mark up where that happened. Now a technical indicator processes and creates all this information based on what it's seen in real terms up here. Now let's see what's happened leading up to that cross. What we can see is coming off a low, green days here, finally turned round, suggesting it's going to be on the way up, and from that point on, it kept climbing. So when it crossed, it looked like it was really setting in place to carry on. So a good technical read, quite accurate, and we got a good result as it kept going up. Now let's move on and have a look at the downward cross or the downward crossover. Now let's mark up and see what happens here. The complete opposite, the black MACD line crosses through and on the way down through the red signal line. Here's where it happened. From that point on, it kept going down to a new low down into this zone here. Couple of good reads in regard to what we can anticipate, and the upward cross kept going up, the downward cross kept going down. So let's move on and see if we can spot it again. Now what we've got here is another cross. This is an upward cross or an upward crossover. Let's mark up where it happened and what happened from that point onwards. Well, it went all the way up to a brand new high up here, really stretched the legs. So another good technical read. It was crossing on the way up, and from there, yes, it kept going up. One more, let's see the process repeat itself. Now we've got a downward cross. So once again, we've seen it earlier. The MACD line crosses on the way down and cuts through the red signal line. Let's mark it up, happened here and kept going down just for another trading day. But look at what probably created that hint as a technical indicator that it could be going down and caused the crossover. This big red candlestick and the longest, biggest, deepest candlestick on this whole chart. So from there, yes, it kept going down, recovered and starts to build back up. Now as it starts to build back up, let's have a look at another cross, or is it? It's a potential cross. Look at the black line, ready to cross, cut through, an upward cross like we've seen earlier, through the red signal line. No, it's a fake out. It doesn't actually cut through. Look at it, it just works right alongside the signal line. They're moving side by side together and it doesn't actually cut through. So let's just mark up where that happened at the point. That's the fake out, or what was our anticipated cross. Now as we've seen earlier, the upward cross led to some permanent upward movement, even just a day or so, maybe throughout a week, but it kept going up after the cross. Now on this occasion, it's a fake out. It just didn't happen. It tricked us. It was a fake. Now let's mark up where that actually happened there. That's where we were anticipating the cross, but it was a fake out. If it did cross, we were expecting it to carry on up to a new high before maybe it came back down. However, it didn't happen. It faked out. It keeps going down and it hasn't crossed and come back up yet. So let's go from where we're anticipating to where it actually ended up down here and maybe still going. We'll have to wait and see what happens in future. Let's have a look at our prices. At the point of that fake out where we were expecting some upward movement, it was $27 and it came down to $25.65. Now in percentage terms, that equals a 5% loss. Now from a technical analysis read, all the way along, we got 4 from 4 good calls. Cross up, kept going. Cross down, kept going. Same again happened twice. We anticipated another cross, but it was a fake out. So that's the beauty and the intellect of these technical indicators. And that's the fake out. Really important you understand what could happen and what happens if it doesn't actually cross. And there's the fake out. It went down instead of the anticipated up. So be very aware of your crosses, when they're going to happen, when they do happen, and what happens from then on. Now, it's never a guarantee. It's maybe a good rule of thumb. We're working on probabilities, but the fake out tricked everyone and it kept going down. So don't count your chickens before they hatch. That was an anticipation that went wrong. So you've got to be aware of what can happen and what the fake out looks like and what happens as a result. So there it is there. That's our fake out. So a good bit of information there. Hopefully you enjoyed that. Part of our indicator series on the MACD and this additional series on the MACD, another video, this time the fake out. So go and watch the MACD video, then watch this, the fake out video again, and apply it to something you hold or own and get used to interpreting it and what happens when it's a good read, and also look out for the fake out. From the SharePrices.com.au studios, I'm CJ Dore. Happy trading.